All right. Welcome back. 2:15, November 10th, 12th. Sorry. What's going on? Right. So we left off yesterday with a sharp rising structure. Okay, that needed to correct. It got a correction, but then got a double top. Okay, another wave up. So now the way we're going to look at this is something to this like this. Okay. And now it's failing. All right. Now, you could have given it the benefit of the doubt by extending the structure into something like this, okay, and something like that, okay. That it's a much bigger structure. The problem with this is it doesn't fit, okay, because then you're going to really see the count. Let me just take this off now because we know what's going on. The count is funky. I hate when I do this. You have it up, okay. All right, because the count now goes like this: one, two. It still could be. It could be the case. All right, this is possible, but there's been a lot of movement in the market. All right, which means this is not valid. All right. So what's the more likely? What is the essence of what the structure of the market is doing? This is the essence. Okay. So now when you count it, it makes a lot more sense. One, two, three, failure. Okay? And that's the point of structures, right? It's the essence. What are we trying to capture here? So you had the one, two, three up, it failed, and now what? Well, if we count the bigger waves, it's a one, it's a two, and now we're going for a three. All right? That's the biggest structure, and likely we'll see something like this possibly. All right, this is a sharp one, two, three. It's a sharp. It's coming down sharp. It reversed sharply, and now it's going to continue in a sharp manner. Remember that price is an advertisement mechanism, right? It's just advertisement. And when it creates a sharp move to the upside, that is to provoke emotions. That is to get you to feel like you're missing out, to get you to buy. Because if you don't, it's just going to keep going up and up and up and up. Why? Because the market knows that there are a certain amount of permabulls, just like there's a certain amount of permabears, always in the market that are going to behave in a specific manner. Okay. For us, the key is to take the macroeconomic information and then contrast that with price. Now, normally, it works really well when there's not a lot of interference from the government, not from the Fed, okay, from deficits, from lending programs, from. Okay, the market does what it needs to do and accurately reflects what's going on in the market, price discovery. But when you're getting these interventions, that is skewed. So even when you're trying to contrast the macroeconomic data with the the price of the market, you have to factor in all those manipulation. Let's call it manipulation. It is what it is, right? It's manipulation. Now you can say, well, it's for the people, right? We're doing this for the people. It's stimulus for the people. It's for the people. Well, that sounds great if it was only just for the people, but it's not, right? You don't go out and buy companies with junk bonds and say it's for the people. You don't go out and backstop risk for bondholders and say, well, it's for the people, right? Yes, in 2008, we had no banking system. right? It started out with FAS 157, where they said mark to market illiquid assets, and then it transpired throughout the whole entire um, chain of events, right? Where you had free market, quote unquote, um, uh, bonds and collateral debt obligations and so forth that is not regulated by anybody, right? Because it's a global phenomenon. Everybody's trading these debts, okay? Uh, and it all exposed a lot of weaknesses in the system. So you ended up in a situation where if you don't bail out the banks, you're screwed, right? That is for the people, like it or not, agree with it or not. You got to bail out the bankers because you're not going to have a banking system on Monday, right? So in that sense, it's kind of understandable. In this sense, bailing out the people, helicopter money, makes sense. Bailing out junk bonds, it doesn't make sense. Uh, Backstopping risk for bondholders does not make sense because you are, in effect, backstopping the risk for the stock market. Because if interest rates are artificially low relative to the amount of deficits that you're pumping into the system, which is 22% of GDP in 4 months, essentially, right? Well, what happens then? Right? You end up in a scenario where rates are artificially low, which means earnings for those companies are artificially low, which means that you're not getting enough return on those bonds at 0% interest rates. So you're forcing money into riskier assets like stocks. And the stock price is artificially inflated as a result. So you're not going to get that contrast properly between the macroeconomy and the stock market. So that's why you have to factor these manipulations into it all. The problem with this artificial manipulation, and I really hate saying it because I feel like I sound like Peter Schiff, but it's different this time. It's not the same thing. It is manipulation. The difference with this is that you end up that the more you print, the more you have to print. There's a life cycle associated with these stimulus for the people, okay? And then eventually, when you don't keep up with those stimulus for the people, well, the market is going to correct. It's going to return to its mean. It's going to return to its normalcy. So, it's very difficult when you constantly hearing stimulus is coming, stimulus is coming, stimulus is coming, stimulus is coming. November now, November 9th, stimulus, Senate is going to come back, stimulus, stimulus, right? So the you don't even have to stimulate. It's the intent of stimulating that's going to keep the markets artificially high. It's the vaccine is coming, a vaccine is coming, a vaccine is coming, a vaccine is coming, a vaccine is coming, right? That too adds to the expectations, keeps the market artificially high, that we're going back to normal. Uh, Trump tweeting, it's just a flu, it's a liberal hoax. It's this, it's that, it's whatever. It's nothing. Look at me, I'm fine. Piece of cake, right? That too artificially inflates the prices, right? Because you have a certain amount of people that believe that to be true because they don't believe in science. They don't believe that the flu season, when it comes, and you couple that with COVID, that you're going to end up in a very bad place. So if you take a step back and you look at all the stimulus that has been pumped into the market, and it continues, by the way, it's not like okay, there was a stimulus, it came and went. No, it continues. The stimulus continues. So you have the expectations of stimulus at an all-time high. You have the artificial expectation that it's just a flu and a hoax and it's just going to go away. And now you're seeing the reality where Um, cases are what 143,000 or something per day. Hospitalization 66, whatever it is. You have that. You have that going. You have the great news that the vaccine 90% accuracy is coming. So all those expectations are right in front of you in a chart. They're all there. They're very, very high. Anything that doesn't meet those expectations will be negative now for the market. Okay? Negative. And you can see that in price. Now, if these things do pan out, then you will see them in the price of the market, right? I am in the camp that you won't see them fast enough. Okay, you won't see it fast enough. I guarantee you, the moment the market starts to tank, the stimulus will come in a matter of hours. Forget about days, hours. Okay, but again, does that fix the COVID problem? No. They're telling us that the vaccine will be available, and there's others coming on the market sometime in April. Okay, what's going to happen between now and April? Right? You got to factor that in. How much damage will be caused to the economy between now and April? How much damage is going to be done to the economy between now and inauguration? Because Trump is not doing anything. He's sitting in his bunker crying because he lost. There's no White House briefings. There's no reaction by governors. They're also scared to shut down, to stop the cycle. Right? Elections, politics. Trump won't concede. You have that to factor in. The tweets of it's just a hoax, it's just a flu, no longer work because you can look at the data. Right? It's out of control completely. And then you end up with a structure throughout the whole entire market, not just domestically, worldwide, where you have double tops, head and shoulders, all over the place. You have structures that are signaling from the bare knuckle charting perspective that are going to go lower. How low? I don't know. I don't have a crystal ball. But I'm telling you right now, the way everything is set up, it's bearish. Doesn't look good. And this is a small time frame. It's an hourly chart. Near all-time highs. Blah, blah, blah. Yes, 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 yes. But I want you to think about what I said. And then look at the market. So let's go through it really quickly. And we'll start with the standard World Stock Market Index. And what you'll see is you had a very nice pop that's failing. Doesn't mean maybe close the gap and pops. I don't know. Maybe that's the case. Dividend weighted S&P, the same, failing. VIX starting to rise again. Okay. This was the support line previously. All right. And just for the record, since this whole COVID crisis has begun, we haven't really gone much below that 22, 23 area, right? Only for a little bit. A little bit in August, a little bit now. Okay. So keep that in mind. While it did break the trend line, you still haven't really gone below it. New York Stock Exchange, pulling back. Dow Jones, pulling back. S&P 500 has broken the uptrend line preemptively. So you can clearly see that it is in a wave 3. 1, 2, and it's in a wave 3. Okay. NASDAQ, broken, wave 3. Right? Small caps, wave 3. Transportations, pulling back. the FANGs, which are the market leaders, the best of the best, okay, head and shoulders, pulling back. World Stock Market Index, pulling back. Airlines, double top, pulling back. China, double top, pulling back. Emerging markets, pulling back. Japan holding up. Australia holding the wave 3 for now, because this is a wave 3. 1, 2, 3. No follow through. And clearly lower high. Nifty 50 continues higher. Where is the Cosby breaking double top? Europe up against resistance, pulling back. Germany pulling back, head test. UK paused. Okay, we wanted to see it to come at least to the previous high. What it looks like now with the latest data, double top, definitely a lower high. Taiwan paused out of the breakout, 1, 2, 3 up, no follow through. Brazil, no follow through, 3 follow through. So I'm looking at the 3 tops here. Saudi closed the gap, paused. Oil pulling back. And remember, oil has a bearish structure, right? So we're going to look for more downside in oil. Bitcoin broke out from this very nicely. Once, twice, 3 times. It's not following through. All right. So this may end up being double top. Needs to correct. That's okay. That's okay. It's still in a bullish formation. But it is a double top. Gold. I would say this is a double bottom. Right? But thrust. 1, 2, 3. This could be a pause, and we're going to see further downside. Remember, if the market starts to sell off, everything is going to sell off. Doesn't matter. It's risk off. We're taking everything out, selling everything. So let me give you an example of that. What happened to gold in the great financial crisis? It dropped 33%. All right. That's risk off. That's I want my money. So don't be surprised this comes further. Real estate. Double top, pulling back. Commodities, double top, pulling back. Copper, holding. Base metals, holding. Agriculture broke out, not following through, up against resistance. Double top, and commodities in general. Sugarcane holding for now, bearish structure. Corn broke out, failed, back into structure. The bigger structure, I mean. I'm talking about this. And you do have a bearish setup, right? This is tight, 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 tight. Boom. Wheat, double, triple top. Steel, pulling back. Soybeans have done really well. They've paused for now, but they still break out. That's good. Dollar hanging out towards the bottom here, right? So again, look at the structure. This is what it looked like before. This is what it looked like before. Didn't touch the previous low and then broke out decisively. Not what's happening here, is it? Bias to the downside. Special drawing rights of the IMF breaking out. US dollar Japan up against resistance, pulling back. Remember, Japan now is the safe haven for over the dollar. Okay. Euro, high base. Pound. Once it gets through here, look for upside. Turkish lira. Dollars falling against the lira. Dollars falling against the ruble. Dollars falling against the Canadian loonie. Australian dollar still holding above the structure. We'll see how this turns out. New Zealand is pushing higher very nicely. The dollar is falling against the won. The 10-year has now formed a double top. Okay. What happens when there's fear in the market? Money goes from stocks to bonds, right? And the higher the bond price, the lower the interest rates, and that's what we're looking at here. So what it looks like now is we have a double top, all right, pulling back, which now is probably going to go lower. If the thesis is correct that we are heading into a bearish market, this structure, which is fully formed, is going to end up falling back down. If that's not true, then we're going to get higher interest rates all the way up to 1.25, where next resistance exists, and then we'll look for the downside there. But for right now, that doesn't look like very likely. What looks likely now is that we're going to go right back down. Aggregate bonds are starting to pop. What we're looking for is for this to break out to confirm the move down in interest rates. European banks pulling back. This too has a double top. After making a very nice breakout in emerging markets currencies, okay, you have a 1, 2, 3, okay, pulling back for sure, but look for this to continue on up. If it doesn't follow through, then it's a different story. But for right now, it's a breakout that's ready to push higher. Financials, double top, pulling back. Banking, more direct banking, ETF, double top. Biotech, double top. Hotels versus airlines. Hotels broke out dramatically, not doing what they're supposed to do, right? No follow through. Facebook, double top. Close the gap. Amazon, double top. Apple, double top. Netflix, double top. Google, high basing, right? Nice little wick up here, not following through. Nvidia, double top. Tesla, double top, head and shoulders, you name it, pulling back. Let's go through airlines only because they're economically sensitive. They were the ones that performed the best, right? From the vaccine news. That's typical of a bottom, right? Provided that it does follow through, which right now it's not following through. You had a nice big bump, but no follow through. Ever since the news, all they've done is sell off. That's bearish. And again, you end up with in Delta Airlines, double top. It's testing this area now, right? But double top. American Airlines, right? I said here, look for the next move up. If this is legit, you should see something like this. Broke back in. Look what happened. From failed moves comes fast moves in the opposite direction. Look at Southwest, pulling back. Alaska, pulling back. Double top. JetBlue, pulling back. Double top. Right? You couldn't put these double tops in until they started to fail, and that's what it's doing now. Spirit, same deal. Allegiant, same deal. Right, this one you can actually see it's a 1, 2, 3 up, right? 1, 2, 3 down. Copa, right up against resistance. Beautiful short. Beautiful short. The risk reward is so wonderful right here. It goes up 5% or it goes down 32% and lower. That is a great risk reward. EasyJet, holding. China Eastern Airlines pulling back. Okay, so we went through the airlines. We went through the market leaders. We've seen the indexes, right? We've talked about how this is starting to fall apart, and we're going into a wave 3. We're already in a wave 3 in the S&P. Okay, and the thesis of a next bearish move is building right now. Doesn't mean it has to follow through. Nothing has to do anything. I don't have a crystal ball. I am telling you that the thesis right now is playing out. Now, what is the next move? I'm going to project here a little bit. And let's say at some point the wave 3 ends. And we're going to end up with what? We're going to end up that so long as price remains, one second. So long as price remains below this trend line, okay, you want to take it short. The bias to the downside will remain until this breaks. Okay. NASDAQ, same. Now remember, this only occurred a few hours ago. This trend line would not exist prior to those few hours ago. So anything below this trend line is bearish. Okay. We are in a wave 3, down. One second, please. Alrighty. Good evening, Alessandro. Hola. Jason, ¿cómo está? ¿Está bien? Tell me you're short oil, Jason. Come on, brother. All right. Um, as we know from yesterday, when we did it, this is the 63-day moving average here. Estoy bien. Bueno. Mucho trabajo, poco dinero. Uh, good, good, good. Profits are always good. Um, this is the 63-day moving average. The 63-day moving average is a quarterly average, which anything above that, you would say that big funds are net buyers. Below that, you would say that funds are net sellers. Okay. If the wave three uh, progresses, we will likely see ourselves below this 63-day moving average, which is bearish. Okay. That's going to coincide with this um, structure, right? Where it's going to be pointing down. When the structure is finished, again, projecting, when the structure is finished, you're going to have, and let's assume that it comes down here at some point, okay? Then you're going to end up with a structure like this, something to this effect, all right? So you would get something like this. You would look for a pop at some point that's going to break, okay? And then another failure, if I am correct. Because what's going to end up happening is, one, this structure will fail, and you'll be below the 63-day moving average. It's going to fight a little bit there. And you will end up somewhere here. This will break. Sure, there'll be some movement here, I'm sure. But once it goes, once this whole area goes in here, it's down. Okay? When that breaks, oops. Break the bottom, break the top, back into the longer term structure, going down. I don't know if it's going to go that low, but I'm just telling you, you're going down. See, there's a lot of technical things that are going to start to transpire. And remember, this channel has been in place for a very, very long time without a correction. Volatility occurs at turning points, right? Now, that's a lot of ifs, 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 ifs. Let's just get through this for now. But the implications from this just alone, this small little structure here in 5 minutes that's covering about 3 weeks worth of data can lead to something very, very more substantial. All right. Bull case. What's the bull case? Well, the bull case is this: that you will come down, not touch the bottom, start heading back up, test it for the third time, and take off. Okay? That you will come down here, bounce, all-time highs, everything goes back to normal, everything is wonderful. That's the bull case. From a risk reward standpoint, okay, when it comes down here and we figure out what the hell it's doing, right? We could catch a nice bull run right? Not a bull run that's going to last for a little bit or whatever. A very nice bull long-term run. Because again, the expectations are very high. Things are, potentially looking good, right? We'll get a little bit of stimulus. Some time will go by. The wave will start to reverse. Hospitalizations will start to come down. Deaths will start to flatten out and reverse, right? And guess what? Before you know it, we're into, I don't know, December, January. Things are pretty much tame. We've kind of gotten used to people dying at 1,000, you know, 1,000 people dying per day, or three jumbo jets crashing every day, and being like, it's okay, it's no problem, right? We kind of accept that. A few months later, the vaccine is up and running, and maybe something like that. Anything is possible. Um, so that would be okay. The market is a forward-looking indicator. Whatever. We'll take the nice long bull run and put this whole COVID thing behind us and continue on. All right. That's the bull case. We'll take a look at the volume here in a minute. I'm just giving you some scenarios. So if you're a bull, that's what you're looking for. If you're a bear, and I'm a bear, that's what I'm looking at. Who's right? Nobody knows. 50-50. According to the charts and according to me, the bias 60-40 is it's going lower. Hard. All right. Let's look at the market internals now. It's 252. And let's see what they're doing. NASDAQ down 1% for the day, led by communications, healthcare, consumer staples, and technology, lagging energy, materials, financials, utilities. Not good. 5 days. What's leading? Energy, financials, industrials. Not good. What's lagging? Consumer staples, technology. We, after all that fucking mess, all the elections, all the predictions, all the cute stories about Trump winning and Biden winning and whatever, all of that. This past week, we're only up 0.55% with extreme waves of 7, 10, 14%. Think about that. I said before it happened, we're going into a very wild time, very crazy time. It's going to come. Here we are. It's all said and done. Up 0.55 in a week. Right. Keep these things in mind, right? As you become a more experienced trader, investor, as you start seeing things that are going to be news driven, that are stupid, they're not going to help you in any way. They're just going to sit there and try to provoke emotion out of you, right? It's better to stay on the sidelines or greatly reduce your risk, right? These are important things. All right. Let's put the volume by price on. Let's start by the daily. Okay, we're at the point of control, trying to hold on right now. It's coming into 3 o'clock. Try to pop a couple times, and maybe I should clean all this stuff up. I'm going to keep this line up here. I think right now it's valid. We have enough of a hook. I'm going to keep it up there. This is the structure to the upside that's now breaking. Let me fix it a little bit so everybody sees it. Okay. And this is what bare knuckle charting is all about, right? 1, 2, 3, up. We have the structure. Okay, and now it's failing. It's doing what it's supposed to do. Okay. And remember that this double top, this M pattern here, okay, did not come to be until a few hours ago. What time exactly? It peaked out at 10:41 this morning. And now it's 3 o'clock, and we have our new point. So, when you're doing this dynamically in a small time frame with bigger implications, you can see how fast things move, right? And that's important. That's important to validate my bare knuckle charting and the way it works. Okay. So point of control right over here at 11/8/25, and this is for the day, right? For the last 24 hours, right? Now, when you look at the structure, the way it moved up, right? Big P. So what does this mean? Short covering rally. That's failing. Okay. So we have a failure now. We have a failure with a consolidation. You can say it's a head and shoulder, say whatever you want. It doesn't matter. It's a consolidation below structure. Structure below structure. You had a 1, 2, 3, right? Consolidation. We're looking for more downside into the close, the last hour, which also happens to coincide with this previous low. Did we look at this smoke? Yeah, we did, right? Wave 3. Okay. Let's take a look at the S&P 500. Okay. Broken. Again, this broke at 11:05 this morning. And now this is going to be a key area, so I'll make it black so we remember it for the future. This is black because we were saying that this structure will resolve to the downside, right? It's done that now, okay? Wave 3, yes. All right. So last 24 hours, point of control all the way up here at 35.62, down 1.4%. Nasdaq is lagging; it's 0.73% down for the day. Small caps are giving it up a lot more at 2.1%. Dow Jones down 1.4%. And transportation is down 1.5%. Right. So the first thing I showed subscribers this morning, well, afternoon for me, for the rest of the world, morning for me, um, was that there was a sea of red. Not a lot, but all indices worldwide were a sea of red, which indicates bearishness for that day, right? So those are the point of controls. All right, now let's do the other point of controls from the top, from the recent top right here. Okay, from the recent top, the point of control is exactly where we are right now, and that's why you're seeing this kind of battle here going on, right? It's trying to maintain that point of control. S&P below point of control, right? And again, look at the structure. It's the opposite of short covering, right? This is puking it up. They're puking it up. All right. Any questions, anybody? All right, there it is, 3 o'clock. Let's see what it does now. Again, the bias for today is to go lower. What do you have for a weekly POC? Nasdaq. Okay, weekly POC. Well, the weekly POC for Nasdaq is funky, and I'll tell you why. Because uh, you have to start measuring it from the bottom, and from the bottom, on a weekly, it's all the way down to 7,639. It's a long way down, right? But again, when we were going into euphoria land, right? I was pointing out that look at the volume, you know, dropping off. It looked a lot worse at the time. Uh, it really, really was collapsing in terms of volume, which again is an indication that you're not in good hands. You don't want to be buying up there. If we were to go to POC on a weekly, it would be somewhere 34%. If we were to do that on the Qs, right? Let's do it on yeah. Qs is market hours, right? You're so far away from anything. It's not even credible. 84%. Right. Forget about it. Forget about it. How about SPY? 68%. It's a bloodbath. Bloodbath. IWM. Where is it? There it is. This is just for fun, guys. Okay. If that were to happen, oof, I'm not saying it can't, but 51% down. More likely for the Russell to do it than the other ones, but oh, that would be ugly. All right. There we go. 3 o'clock comes. We make the newer low for the day. Okay. Potential area of pause or reversal. Any other questions? S&P earnings yield popped a little bit to 2.81. Notice how last time when it popped, when it broke, it was sharp, right? Not as sharp, but at the bottom, fairly sharp. Less sharp. Less sharp. NASDAQ down 0.93. Really nice short right now, I think, would be in the DAX. Okay. This is a really nice short. It's near the all-time highs. Okay, it's got the double top going. A little funky looking for sure, but look at that. Right? Look at the move. Remove these little dots here. Okay. Big head and shoulders came up, tested, failing, M pattern. Right. Nice short, nice short. All right. We continue lower, don't we? Hmm? Yeah. Head and shoulders. Yeah. Incredibly bearish. Hmm? Yeah. Now I'm going to zoom out a little bit, and we'll take a different perspective on this. Where can it bounce? Well, if we remove this, you end up with something like this. Now, granted, forget about the counting, right? It's not valid. It may be valid, right? If it were to bounce. So what would require to have validity? Well, this would be a 1. This would end up being a 2, and then it starts to pop here, right? Hook up, get a 3, and then go down, which invalidates this structure, this upper line, right? Doesn't mean it's bullish, okay? You would just end up something like this. That's it. But for now, that's too much projecting, too much guessing, too much. Stick with what you know, okay? What you can quantify. And then if that were to happen, then you know basically what to look at, right? And this is probably the hardest thing to teach because people will start to project too much and they will confuse themselves. And I know because when I was teaching it early on, we ended up with a bunch of people drawing a bunch of lines with crayons and they were confusing themselves. So then I stopped doing it. Stick to what you know. Stick to what the data is telling you right now. All right. It's okay to project a little bit. Right. All right. Any questions? Just a few words on this Trump nonsense of recount this and there's fraud, there's this, there's, you know, that is so illogical. You cannot make claims and then run out looking for evidence. That is faulty logic. You can't say there's a car accident at this intersection. And I said this yesterday, I'm going to say it again. At this intersection, we need police, fire department, uh, medical support, helicopter medical support, because there's an accident and it's really bad. Everybody shows up, and you tell them, wait, I'm looking for the car accident. Wait, wait. That is not logical. Not logical at all. And this is why I hate fucking politics. I don't like it. It's garbage. How can people entertain this crazy, backwards logic? How? I don't understand it. Either you have evidence or you don't have evidence. If you have evidence, make the claim. You don't have evidence, no claim. You can't do it. It's irrational. It's not normal. I'll stop there, but honestly, I don't understand it at all. Because of one man who can't deal with the loss, 340 million people have to suffer for it. You're saying, well, how are we suffering? Blah blah blah. Well, we are suffering because there's nobody at the helm, right? We have cases of COVID out of control. There's no White House briefing. There's no leadership, no plan, no vision, no nothing. Biden can't get his daily briefings, security briefings, because the man-child won't allow him to. How? That's dangerous. 9/11 occurred right after there was a change in power, right? Remember? It's like, yeah, welcome to the presidency, Mr. Bush. Exactly. There's no transition. That's a national security. How is that not treason? When you knowingly, deliberately not allowing the next president, whether he becomes president or not, even if you're right, how can you inhibit this? How is this logical? Don't know. I don't know. Insane. All right. So 3, 3rd, 14, 3, 15, 45 minutes left to go in the training session. Not much has changed. Everything looks red. It's a sea of red. Germany's down 2%. UK is down 1.6%. Brazil is down 3.75%. Nasdaq is trying to break out here from this little structure. This is incredible, by the way. Yeah, you're chopping the head off the Pentagon. I mean, think about that. Think about that. It is a coup. It's insanity that they are allowed, that he is allowed, one man is allowed to behave in this manner. I don't care if it was Jesus himself, right, or Allah, or whatever religion you believe in. This is not acceptable. Not acceptable. This is the United States, right? We're the beacon of democracy and capitalism and all this bullshit, and we're all sitting here like deers in a headlight, right? Just talking, talking. He's insane, and we have to suffer. I don't understand. How is that normal? I don't care what your political affiliation is. This is not normal. Unbelievable. Anyway, uh, broke the bottom, breaking the top, right? It's what we say every single day. What's it trying to do? How good of a job is it doing it? Okay. 1 second, I'll be right back.
Mic off. Mic on.
All right, I'm back. Sorry about that. Again, I'm all for playing the mind this one role and having fun and whatever. But at some point, you got to get serious and you got to ask the right questions and be like, okay, what's going on here? It has nothing to do with politics, got nothing to do with anything. This is not normal. This is inappropriate. All right, trying to make its way back to the puck. Where the falling trend line happens to be in place. Back when I had mine this one channel, what I learned there was a great many things that I learned, but it was much better back then because I could make small little videos to point out the ridiculousness of Schiff, which was not really about Schiff. It was about the belief of this libertarian that, oh, we can go back to the state of nature and everything will fix itself and life is grand, and you know it was so ridiculous that anyway, it was a lot more fun. But again, my viewership started to grow rapidly, and when I realized why it started to grow rapidly was because there were these progressive MMTers who were former libertarians, most of them, and what I was saying was being attached to a political ideology. And this is true in economics, this is true in great many things, especially when it comes to social media, where you have to attach what you are saying to a theme, a party, a political ideology, or some kind of ideology, flat earther, or whatever it is. And and that's going to get you viewerships. If you are independent in thinking, independent in what you do, uh, and the same thing goes for economics, right? That if you are independent, no one is going to listen to you because it takes effort. So, for example, you look at the Austrians, right? The Austrians are personal responsibility, free markets, blah, 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 right? It's Republican. Then you have the MMTers. Oh, we're working to infinity. Don't worry about it. Yeah, right. So imagine you're an economist. You're going to attach yourself to one of those parties, right? To one of those ideologies. Because otherwise, you're going to end up like Minsky. No, disregard it, right? Is crazy. Of course, he had his own bias, right? But it's crazy. It's crazy how the herd mentality works. Right back down, right? So it came up, tested the puck, tested this area, and failed, right? What's the volume profile showing? Volume profile is showing the opposite of a short squeeze. It's a puking, right? The puking games. Now, on the converse of this trend line going down, it's not something that's very chartable, is it? You can't chart this. I mean, this looks funky, right? Doesn't look normal. What does that tell you? That's a good clue. It's a clue. It's not the end all analysis. It's a good clue you're in a particle market. You can't count this. It's uncountable right now as it stands. It's a very steep drop, right? You don't want to be going long in these situations when you see something like that. You can't count it. You can't. There's no structure. There's no, you know. It's kind of the same way with this structure here, right? 1, 2, 3 down. Broke the bottom, broke the top. Can you expect this one to reasonably take off? No. You know it's going to probably break, right? But the buy is still to the downside. Very chartable, very knowingly, but this is not something you would expect to really take off. It's not a reversal. So yes, you can chart it. Yes, you can understand it, but you also have to understand what it implies. It's not going to imply some kind of huge move to the upside. Let's take a look at the fangs real quick. On a very close observation, and it's not very clear. Maybe I can move it a little bit. Probably, that's good enough. What you're seeing here is a big thrust move down, followed by a bear flag, right? Now it's unfortunate that I cannot go into a smaller time frame, but this is the compass. This is the correction. This is the 2, and we're still waiting for the 3. So for the Nasdaq to really start to fall apart right now is not realistic, right? Until this goes with it. Okay, keep that in mind. It's a very small structure, but you know, for the immediate future right now, it matters. Let's also take a look at the leading indicator. These are the vanilla charts because I use several charts. Okay. All right. This is 6 month NASDAQ versus oil. Now I have the labels here, so I have to move it over. Okay. Um, you can see that it's back into structure. That's fine. You have a 1, 2, 3 up, tight, 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 sharp move up, which means what, right? That this is probably going to start to fall apart at some point, right? You have the NASDAQ at the same time not doing a very good job pushing higher, at least not right now. It could happen tomorrow. This can start to go up, right? But for right now, it's not doing that. Okay. Then you look at the FANGs. Where is Apple? Apple being the market leader. Okay. And you are trying to hold on desperately to this trend line here. This trend line right there. Okay. It's not doing a very good job. It's barely, it's falling below. It's trying to hold me. When this goes, what do you think is going to happen here? Right? Same thing. It's not the end all be all analysis, obviously. But again, everywhere you look, there's a certain sense of bearishness to it. And it's not confirmation bias because the patterns are what they are, right? They're independent of what I think. It's not that I'm only looking for double tops or head and shoulders. It's what they are. You can't argue that. And that's, again, the beauty of bare knuckle charting. You don't have to guess. You don't have to interpret anything. It is what it is, right? And when you start looking at it from all different perspectives and it keeps telling you the same message, well, you know, it is what it is, right? As Trump would say. So this is the other chart I was showing earlier today. I actually posted it on TradingView. Um, you can see here the difference between airlines and Zoom, right? There's a distinct difference. A lot more people started using Zoom because they couldn't travel. And you've also seen that it's been in a very nice uptrend. Okay, we know where the support area is, no doubt. Okay, we know it broke down a little bit here and then popped back up. Okay, so this is where we are. This is an opportunity to buy Zoom while Jets are failing. This is where it topped out, right? October 19th. And most recently, all the way back here, is when the news of the vaccine came out, right? You see how money is flowing out of Zoom into airlines, right? But this hasn't broken yet. So as a subtle confirmation of, hey, things are turning, the bottom is in, whatever, and so forth, you would expect money to come out of Zoom, which would break the trend line, and you would expect that airlines would continue higher. It's not the case, at least not now. Can happen tomorrow. Anything can happen. Again, I don't have a crystal ball, right? And this is what I mean by wherever you look, you end up somewhere that doesn't look right for the bulls. All right. And right back down, back into the previous structure, which is not really valid anymore, but just for the sake of it. Anybody have any questions? 3:30, 30 minutes, 29 minutes actually to go. Let's see what's going to happen. Again, when we started this, the prediction was that we're going to go lower today. That does seem, to be the right call. But wait for the last 2 minutes. Last 2 minutes get funky, man. Last 2 minutes, you'll start seeing something like this. You won't have time to blink. And again, that's indicative of a bear market, right? Volatility occurs at turning points. All right. Take it easy. Just put a little music on.
Mic off. Mic on.
All right, so right back down we go. And what I like about this move down is that it's grindy. Grindy puts people to sleep. Thrusty, they don't hold. Grindy holds. Um, so if you're a bear, you like this market movement. All right, so anyway, last 10 minutes in the trading session. The last two seem to have really created some havoc. So all this can reverse, of course. But again, I'm going to point out that when you have a grindy market lower, it's more substantial than a thrusty move that's trying to provoke emotions. Now I know to some people this doesn't make sense, but as you get better and better and better at reading markets and trading and investing and so forth, you'll understand what I mean. All right. So travel again, 674. So keep grinding lower. 5 minutes left to go in the trading session. Nasdaq down 0.68. S&P down 1.3. Small caps improved a little bit, 1.8. Transportation 1.6. All right, and the FANGs are down 0.68. A rare occasion when the FANGs and Nasdaq are pretty much the same. Usually, the FANGs are more extreme, one way or the other. It doesn't matter. The VIX up to 26. All right, so it had a nice little pop for today. Let's take a look at that. All right, so we had a nice little pop, broke the previous high, reversed back down, but clearly way below the 22 we were just a little while ago. Okay, so a little bit of fear coming into the market. All right, New York Stock Exchange continues to pull back. You can make an argument it's closing the gap, blah blah blah, whatever. I'm not interested in that really. In this case, again, it's happy at the point of control from where the bottom occurred. Okay, the recent move down the bottom is what I'm talking about. All right, it's holding that point of control. So again, grindy moves give hope to people, which keep them in there longer as price continues to move in one direction. Eventually, you get a little pop, right? It's an elliptic formation, basically, right? And then you get a pop, and then it resumes its way down, and that's what ends up happening, right? You get the way markets move is thrust, consolidation, thrust, consolidation. Same thing on the way down. Thrust, consolidation, thrust, consolidation, thrust. So we'll see how this is going to play out. All right, you'll get a correction at some point back up, and then look for more downside. So for now, anything below this trend line, anything below here is bearish. All right, till proven otherwise. The burden of proof now is on the bears. They have to prove that they can keep price below this trend line. And that should make it a little bit thicker because it's more significant. All right. There it is. So that's what we're looking at going into the close. The 1, 2, 3 down. Right. Continuation down. We'll go into Friday, see how this is going to behave. If price is violated, let's say when China opens or whatever the case may be, if that is violated, then this no longer obviously applies, but then we will be in a 1, 2, 3 up. Okay, so this would be the 1, this would be the 2, and then what we see for 3 up. Okay, and then we see what it looks like, and then we'll look for the downside. All right, but you don't want this to really continue for too long, because then it's going to end up being a triple top, and that's bullish. It has to resolve fairly quickly. Fairly quickly. Again, a lot of projecting, but things to be aware of. Right? If you start going like this, right, then you end up with a cup handle off. We go to bullish land. Okay. All right, there's the last 2 minutes of the trade, breaking out a little bit. Again, maintaining that point of control. We'll see how it plays out tonight. We'll see how it plays out tomorrow. We know what we're looking at. We know what the bias is. We know what the message of the market is. And let's do the final count here to see what the market is saying, the internals. Okay, at the end of day. Again, S&P is down 1.27. Consumer staples and communications are leading. Energies, materials lagging, right? Not very bullish. The last 5 days, 0.54, nothing much has changed since we last checked it. Technology and consumer discretionary should not be lagging, right? If it's going to be bullish. Um, so energy financials leading is not the path to prosperity. So not looking good. Not looking good for the bull case right now. And there it is into the close. We broke this trend line. That's okay, right? That's what it's there for, to be broken at some point. And there's that move up we were talking about. It's like magic, this fucking thing, right? Magic. Last 2 minutes of the trading. Quick, 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 quick. Well, what is that? Well, that's a bunch of people that were betting that this would, fall apart. It didn't, and now they're short covering. So you see the price movement. It's still valid, but whatever. That's it, guys. Anybody have any questions? No. Don't forget patreon.com/realmacro. Come on down and subscribe. Thank you, Alessandro. Thank you, everybody, for coming. Please don't forget to like and subscribe everything below on the YouTube page. It will help me greatly. And that's it. So we know what to expect for tomorrow. Okay? Oh, look at that. It keeps going. It's beautiful. It's beautiful. You gotta love it. Right into the close. No, now we're all bullish. Yeah, okay. All right, guys. Thank you. Good night, and I'll talk to you soon.